Surprise, surprise. We're ending the week on a high note here so far. You know our Friday trends, higher lows for the week. Coming at the end of the week. CPI data, who really cares? Social Security will be based on it, a few other things, but hot or not, we know what the Fed's doing. We got earnings. You don't even need good earnings in this market. You don't even need good guidance, and they buy the dip. Intel, government help, over 40. Decker's not so good. Job cuts in America. Tony Pawlak at 835. And we did even mention the Trump trade. Let's get it started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, here we go. We're up 23 handles, knocking on the door, 6,800, 67.98.50, that all-time high, 68.12 and a quarter. The buck, Perky today, up 12 cents, 98.85. TLT, holding a small gain, up 7 cents, 91.50. USO on a tear, up $1.16. Should we be looking at oil stocks? 74.45. Gold, the first losing week in 9 weeks, down 234, 378.78. Silver, down not as much on a percentage basis, down 56 cents, 43.52. Bitcoin up $795, 111,215, as some of the big banks are going to allow you to use your Bitcoin and your Ethereum as collateral. Triple D, yet another Friday here on Pre-Market Prep.
Yet another buy the dip. Yesterday market, they just can't help themselves to come in and relentlessly buy the dip. The eternal strategy of the eternal strategies. Rip has been working too. Does it work today? Well, that's to be determined if the inflation data comes in hot, but who knows? The party continues. It's just the same market. We're right back to it. Shorts win for a day, and then that's it. That's how we work.
We gave them one day. One day.
You get 1 day. You get 1 day shorts. Now, all of a sudden, back to your caves. Well, we'll see. See the inflation data. You are saying it's not going to matter. The Brentster coming in here right now to say good morning to us all. Mr.
Good morning.
Working the news desk for us. He'll be ready on that CPI. Does the CPI data matter to the Brentster?
It matters to me because I'm going to be breaking in with it, and I want to get y'all the good info in a quick fashion. But I think the interest rate path for 2025, maybe even the beginning of 2026, is already set. If we get an inflation data point, in my opinion, today, that's like 6%. I just said this over in the STN room. If we get a reading like 6% today, I don't know if that's going to affect what the Fed is going to do. If we get a reading that is very cool today, a 1% reading, I don't know if the Fed is going to adjust its path. So that's my take.
What if it's light? Holy mackerel. What if it comes in super light?
I don't know.
Well,
I don't know.
They're calling me out in the chat. I'm going to get called out in the chat. I'll own it.
Why?
Yeah, I said sell the rip yesterday. Well, I've said it on the show. I said it's been working on a few stocks, and so far, so not so good on sell the rip here. But again, I'm going to say this. I tweeted yesterday. It's okay to be wrong, not okay to stay wrong. If I was right 100% of the time, I'd be the richest man in the world. Wouldn't that be awesome? Wouldn't that be awesome if you could be right 100% of the time? Because that's what this chat demands. They demand 100% right all the time. So when you're wrong, you suck. The best traders in the world, right? Gene, what's Gene's record there when he was there running 51%? Millennium?
Yeah.
51?
Yeah.
51? Yeah. But you know what? That's not this chat. They demand 100%. So I apologize for saying sell the rip yesterday because I wasn't right 100% of the time. But you know what?
Thank you for that.
Doesn't mean it's not going to work here too. I will say this entire year has been about the fade trade to a certain extent. It really has. So it was my acronym to start the year. Let's just go through my acronym and see how wrong I've really been. So fade trade. That was my acronym for the year. FADE. The F was for fade, saying, I think this year could start where it ended. Well, that's not really what's happened, but it's had a lot of fading opportunities here. The entire first 3 months selling off, the April sell-off, the buy and the dip in April. That worked pretty good. A lot of chop and slop. Then the fade. A was the A in my fade trade. AMD. Well, that's done pretty good. D was the fade, or the D in my fade trade. That's done pretty good. E was Etsy. Well, that's done pretty good too. Hell, that's almost 4 for 4, because I tell you, this fade trade has made me a lot of money this year. So maybe yesterday I was wrong to think that there may actually be sellers that come in. They didn't emerge. But overall here, fade trade, not doing too shabby. Denny's P&L on the year, not doing too shabby. So haters, hate all you want. Yes, I'll have my moments in time that I'm wrong. I'll admit to it.
Haters gonna hate. Haters make
They
you
love
famous.
hating. It's okay.
You
I
know?
love you, haters.
That's the
You know
internet.
what
That's
the
the
haters
internet.
do for
The
you?
internet was made for hate. That's what it was.
I think it was.
It was. It wasn't made for good. It was just made for tyranny and for people to pick on each other and be mean. It was supposed to be meant for good, but it's not. It's to be mean. And you know what? Also, mean anonymously. Like these
Yeah,
people.
a lot of anonymous meaners for sure.
We talk and give our opinions. Like they're all. We don't know who they are. We don't know. Maybe some are bots.
Well, that could be too. I will say there are a lot of lovers in the chat here too.
There
So
you
know,
go.
a lot of you guys are
There
in
you
the STN
go.
room. We love the STN room because other people all love us. They're coming in. They're actually coming in. They get all the other strategies. They get the flips and the turns, and when we change our mind, because they're getting us all day. You get a snippet. They get us all day. So, but we love everybody. We love the haters too, because they keep us thinking. If there was no hate and everybody disagreed with you, we would suck at trading. It's like they get your mind thinking. Well, there's another case. What's the other side of this story? What is the bear case? What is the bull case? So you know what? You need the haters to be a good trader. So you know what? Embrace the hate. When you post something on Twitter and everybody says you're an idiot, embrace that, because maybe you are an idiot. Maybe you're wrong on this one. Maybe your whole thesis is just wrong. And it's okay to be wrong. It's not okay to stay wrong. That's it. And as a trader, it's your job to change your mind. Right now, I'm kind of neutral to this market because I've kind of seen a lot of chop lately. I mean, we can say, oh yeah, it's been relentless bull market, but the S&Ps are basically where they were 3 weeks ago. It's been a lot of chop and slop. The fade trade has worked very, very well.
Okay, two things is you called it the news desk. Well, it's just Brent, so it's the new desk, right? We only we have other people monitoring it.
Second, I monitor the news.
I'm trying to follow the outline for today, and we're at 8:08, Brent, and we haven't got to our first thing.
That's okay. It's a suggestion. It's not a we must. It's a suggestion. If there's a triple D rant that pops off, okay, that's why we're here. That's why we're here.
It wasn't just the chat, so it wasn't even just you guys. I had multiple people. They like keep you honest. They write it down. Denny said this. I had multiple tweets at me too. So it wasn't one person. It wasn't just Jay. Jay's been in the chat for years. There was 3 other people that were talking about too. Jay's been in the chat for years. We like Jay. And Jay keeps me honest. Jay loves us, hates us. So no problem, Jay. Don't take it all offensively here to either, because it wasn't just you. It was a million people. Not a million people. But I had 3-4 messages say, Daddy, where's this sell the rep? And then they're like, okay, I'm going to address it. I was wrong.
Not wrong.
Bearish back to your caves. It's wrong to be bearish because we got the Trumpster here. The Trumpster, it honestly changed when Trump came out with the whole quantum thing over the week. So here's how much the bulls, continue to be in control. Here's how much Trump. So they come out. Wall Street Journal that said 2 nights ago that the administration is going to take positions in quantum stocks?
Yes.
That completely got denied by the administration yesterday. Not true. So the stocks rallied 20% on the fake news and then don't sell off when the news has said it's fake. That's crazy. But that's the way we are. Fake news brings the stocks up. Then the news, it's fake. We'll keep them up anyways. Bring up all those quantum names. Let's start getting into stocks because this is a good segue. IONQ, back up towards its highs yesterday. The administration said they're not taking a stake. QUBT, back up to its highs from yesterday. I mean, that's what bailed all these quantum stocks out. So it wasn't, the fact, it's just Trump. The Trump put exists. Even when it's fake, it exists. Even when it's not Trump, it exists. The fear of Trump for the bears exists. And now they're all scared. The quantum stocks, longs or shorts are all scared here now because they're scared that maybe, just maybe, Barron Trump's long some of these names and Trump is going to come and bail them out still.
Dennis, don't.
Conspiracy
I looked
theories.
at that tweet yesterday, man. Just, I looked at that tweet and I'm like, oh, man. Oh, there goes that. But let's get to Trump. He terminates all trade talks with Canada. That's the back row news.
Well, it was a commercial.
Yes.
It was a commercial. So Canada, blame Canada. Wasn't there a South Park episode? Blame Canada. Blame Canada. South Park movie. That was pretty funny, actually. You remember that,
I never
Brentster?
watched that show.
Yeah.
Blame Canada. They had the signs, blame Canada, with their little beady eyes and, their things and their heads bobbing up and down like this.
Terrence and Parker.
Yeah, it was because of Terrence and Phillips show with their farts and all the vulgar humor. South Park's always funny. The commercial was from Ronald Reagan. So basically, the Ontario government put out a commercial. I don't know if you can find it. I don't know if we could play it. We'd probably get copyright. But anyways, it was 30-second commercial, Ronald Reagan saying how bad tariffs are for the U.S. and how it costs jobs, and eventually free trade is the way to go. Canada played that clip of Ronald Reagan saying that stuff. Trump is completely denying and say it was all made up. The clip is real. And then it's just brought to you by Ontario government. Ontario is a province in Canada. Trump's lost it, said that's it. All trade deals are off, negotiations are off, blame Canada. Full blame Canada. Elbows up for Trump. So Trump went elbows up against Canada. EWC doesn't really care. It's down a little bit, actually. It cares a little bit. And don't ignore that 50-11 because that's not real. That was somebody that saw the ad and got really excited last night and sold Canada down 1%. Canada's sitting up here at the highs too. EWC has been really strong.
I know.
EWC has been actually stronger, like one of the stronger ETFs, which is surprising to me because I do believe Canada needs the U.S. I've said this all along. Trade deals, Canada needs this. We do a lot of trade. I mean, we need U.S. as a partner. So I never went elbows up. Trump's elbows up right now. Will the elbows come back down as the art of the deal? Probably. So I don't know if this is like the end of trade talks with Canada and the U.S. He'll have trade talks start next week again.
We're not going to do a poll, but did folks in the chat, if you care to throw in when you think talks with Canada will be resumed, go ahead and
the over under is like next Thursday. Yeah. Okay. No more picking on Trump. People don't like that picking.
Can we do a little bit more macro, real quick?
Yeah. Give it.
Target cutting 1,900 corporate jobs. 1,900.
That's good news.
That's good news.
So who sold this last night? So on the headline, the news algos are now just completely lost. On the headline, they knocked Target down $1 on this. I'm like, well, that's good news. When your company's struggling and it's got too many employees, and them obviously it's losing market share to Walmart and Costco's whole time, you need to get more efficient. So usually stocks actually rally in that situation. But no, news algo says that's bad news. We better go sell. Target went down $93 last night. 93 and a quarter maybe. And then, or maybe it was 93. I can see on your chart. It did hit 93, it looks like.
Yeah, it did.
And then they turn around, they start buying relentlessly. Well, not relentlessly, but it's up. And I think it should be up on that. And we are in a value market here now, too, where value stocks have kind of turned the corner. It's going to matter. CPI data is going to matter today. 8:15 is 8:30. We're going to get some CPI data. That could maybe derail if the inflation's hot. But the value trade's picked up. I mean, really, this last few weeks has not been the Momo trade, folks. It has been the value trade that has held the S&Ps up. There's one reason the SPY is up where it is, and that is rotation. Because we know we've seen bear markets form, yes, in ACLA. We've seen bear markets form in the quantum names. We've seen bear markets form in a lot of names that are off significantly more than 20% from the highs. But yet the SPY is relentless. Yet the SPY continues to hold up. Yes, the SPY is diversified enough that it is now impervious to sell-offs, Joel. Impervious, unless we lose the Mag 7, because the SPY is really a Mag 7 index.
Okay, I just want to be really clear here about what I think about the $95 level, okay? I have a horizontal line at 95. 3 of the last 4 highs have been in the 95 vicinity. Going back to September, first date in September, high 95.36. Resistance is resistance until it is broken. 95 is a big level, but that's all that I'm going to give on target. I just want to mention AMAD here. And the reason I want to mention AMAD is they're laying off 400 people. I mean, let's see how that stock I saw was down a little bit. They're not as happy about AMAD cutting jobs here, but that's a macro thing, right? That's bad. That's overall the economy is losing jobs, but then that supports the Fed cutting rates. But people are losing jobs, right?
You know what it is?
What?
News algos. Okay, news algos. Write this down. I know you algos can't write yet, but maybe you can. Use your chat GPT news algos. When the stock's at 52-week highs and cuts jobs, it's seen as bad news because it means the growth is potentially slowing. Wow. When the stock is at a 52-week low and it cuts jobs, it's seen as being more efficient, and it's good news. For real, when you see companies with their stocks at 52-week highs cutting jobs, the market usually perceives it as bad news. When the stock is in the gutter, like Target is, and in trouble, they see it as, cutting expenses, that's what we need to try to turn this thing around. There's a big difference. So look at the chart. Charts sometimes work. They work for this. Applied materials at all-time highs, cutting jobs, not quite all-time highs, but back to like 2024 highs, so 1-year highs. And then Target completely in the gutter at multi-year lows, basically. I know we're off like $5 from it, but 180 a year and a half ago to $94. So they see it as like, okay, now the turnaround starts because we're actually cutting some expenses. You don't want to cut expenses when you're at all-time highs. You want to cut expenses when you're at near lows. That's the biggest difference.
Okay, Dennis, what textbook did you get that out of?
Just made it up, right? Put it in my book. The difference between cutting jobs, apples are not equal to oranges, something like that. You can have as the title in like 2 sentences. Cutting jobs, stocks 52-week high equals bad. Cutting jobs, stocks at 52-week low equals good. There you go. Algorithmically all put out there for you. Go do as algos. You'll get this one right next time.
Okay. Good one, Triple D.
You like Brent like that one.
I love that one. I'm emailing Josh right now to clip that one out.
You know what?
All right.
You just almost had a double water
disaster. Why am I so wound up
disaster.
today? I didn't even drink coffee.
I almost had the double water
Where's
disaster
Anne-Marie
on that hand flick there. Brent, you really couldn't hear the water splashing. You put that on YouTube. You were just joking,
no,
right?
I absolutely could hear the water splashing. You were like, oh, shh. It was awesome. It was awesome TV.
I told Lisa, and she said maybe you should use a sippy cup.
I agree. Right now, just now, we ride.
My house from when they were a kid. I'll send you some.
WRD. Breaking news: WRD Uber begin offering autonomous robotaxi passenger rides in Saudi Arabia. I think this is just a formality. I believe we already knew this was going to be happening, but WRD shares are moving higher on this right now.
Yeah, but we rally on the same headline 3 times. This is a good segue into last night. It's a good segue into last night, which is the craziest move you're ever going to see. So last night, news algos, because they don't remember the news, they just trade on the news. We get this Anthropic headline. The Anthropic is going to be doing a cloud deal with Google. Whoa! Google, rally. I'm like, and then Amazon selling off. And then I'm having deja vu here, Brent. I'm full on deja vu here because did this not happen yesterday? I'm like, Brentster, dig a little bit here. Did we not get this exact headline yesterday? Brentster digs. Yes, it's actually word for word. Go, Brent. It was word for word. The identical headline 2 days in a row. And they did the same thing. They rallied Google and sell off Amazon again. Maybe it wasn't yesterday, but it was like a few days ago, a few days earlier, where you saw Google rally. Remember, Google had the bad OpenAI, then had the Anthropic deal, and then turned around and got all those losses back and closed higher. Maybe I'm going back to a week ago. And then Amazon sold off on it. And then we did it again last night, just for fun, on the same headline.
Yep. And that's an important part. You want to look for things like the exact same phrase mentioned because it shows you where some of sources are getting this information from. I think it was the WSJ report on the Google Anthropic thing a couple days ago. In that report, they used the word exact phrase, worth tens of millions, tens of billions,
Tens
worth
of
tens
billions.
of whatever it was dollars. When we did get confirmation, the report last night from Bloomberg used the exact same language. When we got confirmation from Anthropic via their news website a little bit later in the session, that was the exact terminology that they used. So what you can kind of surmise here is somebody at WSJ probably got wind of this Anthropic release, put it out a little bit earlier, floated it out there. Maybe the companies even wanted them to float it out there. Maybe they wanted to test the waters a little bit. Not saying that there's anything like nefarious about this, but as traders, as researchers, as investors, you want to take note of these things because you can get more information. There's so much information happening between the lines in these cases.
But what is so absurd is that the news algos, they don't remember. There's going to be AI and it's going to remember eventually, but there is a huge edge in knowing that the news algos don't remember. And they're going to do the same thing on the same headline because they don't remember the headline. We're human. We can think. We're like, oh, we covered this and I heard this 48 hours ago. Now I'm hearing the exact same thing with the same words again, yet they rally. Google again, and, rallying all the way up and we're ripped higher. And now it's moving up to S&P's moved up, so that helps it a little bit. But Amazon sells off $2.50 on that headline. Well, that dip was a buying opportunity because Amazon has come right back up. It's still down a little bit actually, which is crazy, but it came right back. So you see the big dip down to 218 there, Joel. $2.50. You can see the little spike,
right here.
the little gray pointed out on the chart, please, on the left chart.
Oh, I see it right here.
Yeah, right there. You gotta make that mouse bigger, right there.
Let me get an arrow.
Make that mouse bigger. We gotta get you all better on these charts, folks, and you can point the stuff out a little bit more. Circle it. But anyways, it stayed down there for a split second because then human beings said, we already know this stupid news algos, and they bought the dip. And they won. And again, buy the dip works. Sell the rep. Now that doesn't work today. So Google went down a little bit. Google did pull back in, but then the S&Ps go up and Google goes back up anyways. So keep that in mind.
I followed the Goog without the L, and Emily was asking about it. You have one number.
I'm short
the all-time high, 257.88. All-time closing high, 257.02. So if you're playing it for a breakout, that's your level, 257.88 for Google. The Amazon chart is a little bit interesting because it's had a good couple days since it got to the 211 level, but it's below the 50-day. That's just that's the only note here, below the 50-day moving average for Amazon, where Google been strong, still above it.
Okay, earnings last night. We're going to start with Motor City Ford. Start with Ford. We were looking to play this, and I played a little bit in the STN room and lost. And what did I do wrong?
You lost. You lost.
I won on half, and then I sold the dip because I was like, they cut guidance. I'm just going to get out of this. But now in a bull market, cutting guidance, it doesn't matter in a bull market here. So GM blew it away. Ford misses, or I don't know if they missed, but Breadster, did they miss too?
They didn't. They beat on the quarter, 45 cents versus 36 cents. Sales beat pretty nicely, about 47 billion. They cut their, off the top of my head, I think their 2026 earnings before interest guidance pretty notably. There was a fire at a plant called Novelis, which impacted their results. They cut their 2026 EBIT guidance by about $1 billion. I think it was like around 6.5 billion. Now it's down to around 5.5 billion. Market don't care.
No, market don't care. We buy dips. We relentlessly buy dips. So let's go to the evidence of the dip buying now. And they know if we sell off here, something to say about dips today, and then we'll sell the rip days. Maybe 8:30 is things are going to change. We have 5 minutes to talk about dip buying here until the CPI comes out and maybe changes everything. So yesterday, Tesla dips. Dips relentlessly bought. Blind squirrel winning nuts again. IBM dips on earnings. I don't know why the IBM was down because the IBM report was good, but they just we're selling stocks yesterday. Not yesterday morning, they were selling stocks the day before. So IBM dip opens, institutional buyers just buy it right back up. So IBM gets it all back. Ford, same thing yesterday. Cut guidance. Oh my gosh, this is going to be bad. Ford cut guidance. No, we're in bull market here. Goes all the way down. The expected move is like 65 cents. Goes all the way down to almost kiss the expected move down to 1170. Then decides, no, we like the guidance cut. The market fundamentals matter. We like the guidance cut. We rally it all the way back up to scratch. Then no, we're going to rally it all the way up to the top of the expected move. Where is that CC Ligator? Because this thing literally went down and kissed the bottom of the expected move range, then rallied all the way up and kissed the top of the expected move range, which we had that part right. Because we were saying this thing could stall out at 13 because we're at the expected move. And absolutely did where it found resistance. Big whole number line up with expected move. Ducks all in a row right there.
At $13.
$13 on the kisser, which was the exact expected move too. 65 cents up, 65 cents down. So it literally, if you had the CC channel, we'd obviously have the show with C Ligator every Wednesday. Please join us. Shameless promote there. Right there is his bands. It went boom to band, boom to the band. The bands held. Really strong elastic bands there on Ford.
Did kiss 13's got to be a pile of paper there. If this is going to be the move, then we're going to start looking at 1250, 1260 as support. That was the area of 3 highs in a row. So old resistance, new support here. If you get a pullback to that, 13, I mean, could go through it today in this crazy market. Probably a pile of paper there because you haven't been at 13 in a very long time. So keep an eye on that. Also, just looking at the confluence here, your 50-day was at 1179. After you established, I mean, you had 1, 2, 3, 4 lows at the 1170 level. So kind of, textbook as far as the expected move, putting that together with support. And keeping it up, man, GM, it made a new all-time high yesterday, but closed red on the session. So, but nowhere near looking like it's going to get back that move for the earnings move. So there's a look at Ford in GM, 3 minutes.
We need to write like a playbook for playing earnings, like a chapter in the book, and obviously expected move would be right at the beginning of it. So you know your bands, you kind of know where the stock wants to be. But then, looking at, how the setup is, strong earnings, that's a high bar and all that other stuff, So Brentster will write my book one day. Or
the reason 13 is it hasn't been up there in a long time. And it just, I know you don't have your open book anymore, but that's where a lot of times institutions,
they probably littered with sellers up there at 13. We can see them.
And then what you get is you see the high freaks. They're like, oh my Lord, look at all this paper at 13. I'm going to short 98. I'm going to short 99. I'm going to buy it 90, 91. If it goes back up, I'll short 98, 99. Boom, boom, boom. They'll do that 19 different times. And then boom, once it busts through enough paper, they're like, oh, I'm going to take my cent loss on this one, and they'll scoop up the paper. So little bit of order flow, kind of old-fashioned talk here, but just want to point that out in Ford.
First economic data point in since the government shut down here, at least the first big one that we're going to get is CPI. Can you preview this, Brentster, please, for us?
Absolutely. CPI, this is going to be the reading for September. We are looking for 0.3% increase for the core reading. Core reading, in my opinion, is the one you want to look at. It removes the food and energy spaces, which can be very volatile. We are looking for a base reading month over month, up 0.4% year over year. Both the core and the base reading are going to be expected up 3.1%. We have about 50 seconds here, setting up for our first inflation data point in quite some time.
Awesome. Okay, we're excited. 45 seconds away.
I'm excited because I haven't been able to call out a number. And wait, how long has the government been shut down?
2 weeks, 3 weeks?
Yeah. Okay. Here's the setup.
Here we go. 30 seconds. Give me the setup.
All-time high is 12.25. The pre-market low is 76.50. That's all that matters. It's all that matters is the algo jumpers. Where are the algo jumpers?
7.
Oh, wow. Crickets. Oh, is this going to be a cricket number here?
I don't know. I think I'm going to get shot. I'm going with the fade trade. Up, down, left, right. Oh, no.
Moving higher. Market moving higher.
Only
we are waiting for the data. Light core CPI up 0.2% versus the 0.3% increase. A light reading. Also the year over year readings. cooler than expected, 3% for both the core and the base readings. Our economist estimate there was 3.1%. So I would call it better than expected prices data point here for the month of September.
Well, there was no opportunity to buy the dip there.
It was a no doubter. And the algos are just like, back to the moon.
The moon trade.
The moon
Buy it
trade.
here.
New all-time highs. Bulls.
Quantum
Bears, back to your cave. Bears.
Quantum stocks here.
Dead.
Tesla higher, Robinhood higher, Coinbase higher, HIMS moving higher, SoFi moving higher. I understand everything's moving higher, but I'm trying to target data center, infrastructure names, IREN moving higher here.
Oh, yeah, it's on. Wow. These are big moves, folks. Big moves. Big moves. Big moves.
Okay. Let's go to the lie detector test here with the TLT. Let's see how the TLT has been strong lately. I mean, this thing has not, get a little bit of a bump, but that's been strong lately. Let's see if it's an everything rally. What about the IWM?
Oh, yeah. Oh, yeah. IWM, like, oh, yeah, baby. It likes it. XBI, like, oh, yeah, baby. It likes it. TLT, like, too risk off. Too risk on for risk off things. But IWM, XBI, rip roaring higher here. It likes it. Buy the dip camp comes back into play. Everything's moving. Retail stocks, Momo stocks. You got to like put on like the glasses to find the red out there. There's not a lot of stocks that stayed red here.
Yeah. Is there any? Deckers
Tesla's
is red.
trying to stay red. 450 is huge on Tesla. So Tesla's trying to stay down.
So reminder that we're going to get our Fed Fund futures rate updated here. They're probably already updated. If you have a Bloomberg terminal, these are probably updating in real time. For those chumps that are using the public data over at the CME FedWatch tool, it'll be about 10 minutes from now when we'll get an update. It takes about 10 minutes. We'll see if the Fed Fund futures reacted. We'll see if traders and investors are now betting more or less for some kind of Fed adjustment the next 2 or 3 moments. But we've got this data. I see the market moving higher. Yes. Does this change our path for interest rates this year? No, I don't think so. That's my nice friendly reminder for some of this price action that we're seeing right now.
Brad
you
was
get a
convicted.
rate cut. You get a rate cut. Everyone
and
gets
you
a
get
rate
a rate cut. And you get one.
Brad was convicted on the title for the show today. I was going to say, will the CPI data even matter? And I wanted to have a question mark.
Question mark.
And he said no question mark.
No question mark.
No question.
We're being certain on this. We're being bold. We're being bold here. Like the Trump administration. Bold.
Even Beyond Meat is coming back.
Oh.
Fake meat burgers are hot too on the CPI data. Because you know what? If interest rates go down, people buy more fake meat burgers.
Okay. I'm just going to say we're 20 handles off the pre-market high. So the high for the week is in. I'm right now. I'm saying that's a big number, 17 handles away. Very important over the next 55 minutes or into the open or throughout the remainder of the day. We get back. 20 handle pull off. I guess it's just another buy the dip opportunity, right? 20 handle sell off, but we'll see what the bulls can do.
Yeah, hard to bet against the bulls. Seems like ever in the long run. Short bets work in the short-term time frame. They don't work in the long time frame. That's why I never go short in the long-term account. People's like, why don't you short? Why don't you hedge? Why don't you do stuff in the long-term account? With the exception of COVID, which we could all see coming a mile away, there's just, you stay long in your long-term account. That's how we roll. Let's go to Tony. Let's get Tony's thoughts, because Tony thinks long-term sometimes too.
There he is, a well-rested Tony Pawlak, owner of Real Life Trading, taking the reins from the awesome Jeremy Newsom. So why don't you just erase everything on that board and just put buy?
just only buy.
Only buys. Only buys.
Yeah.
It would work in the long run.
It does work in the long run. Stocks tend to go up. They tend to go up more than they go down. For me, if we're going to get any substantial selling, the weekly trend has got to break. When the weekly trend breaks, that's when I start paying attention. That's when I start hedging. And so I can even show you what that looks like on a chart. And
I want
what
to
I'm
see
looking
that.
for.
I
Yeah.
want to see that.
So for me, here, I'll share my screen. I've got this down already, right? We got
You're a pro, man.
we're a pro. We've been here, done this. All right. So for me, what I'm looking at on trend, a lot of people call, which it works, whenever things pull back a certain percentage, right? So let me get this thing out of here. There we go. And draw it with this little guy. Okay. So I personally watch for higher lows. Whenever the markets are running up, that's what I want to see as a higher low holding. Whenever that higher low breaks, to me, that's when I start really paying attention. So if we go out to a weekly time frame, right now, our higher low is sitting all the way back, in my opinion. Now it's all the way back through here. So, I mean, it's got a long way to go to break. So even if we do get pullbacks, I still don't care about that. They're going to get bought up, in my opinion, until this breaks. So like if you look here, this was our higher low. This was our higher low. When this thing broke, we get substantial selling. And even then it's quick. We go back over to here.
Never lasts.
Yeah, it never lasts. This was our higher low here. This broke and actually got retested on, and the bulls could not reclaim it. That's when we end up getting a year's worth of selling. And so even then it's pretty short term, but that's what I look for. If I'm going to actually put some hedges in my positions against my long-term stuff, or even try to really short the markets and make some pretty good money, like I'll do some short-term shorts. Like these little drops lately have just been printing money. You're buying puts like 2 weeks out, 14 days out, and you buy them at like a 35 delta, and you just get these flash sales all back, go back over. Those tend to print off really well, but you've got to take your profits. You got to understand where the bulls are going to be back in. But whenever we break these higher lows on a weekly, that's when I'm always paying attention. Right now, we just broke the higher low and it got squeezed out. So that tells me dips are getting bought and we're rampaging higher if we ever do dip, because this market doesn't ever look like it's going to dip.
I know. Well, it dips for a day, Tony, and then they just come back and they just buy
It dipped
right
for a
back up.
day. Yeah, it's
For a day.
for a day. And the dip for the day, was only like a 2-week move in 3 hours. So it was pretty intense. But here's something that I'm watching real quick, though. I think a ton of bears got in this position, as they should. This is crazy. If the markets wanted to drop, they weren't going to do it here. But where would they do it? They do it as soon as all the bears get out. And that's going to be on this gap. So
High.
if the bulls do not hold this and we end up getting a really strong sell-off today, that could trigger some fun. And really, it's the 650 level. If that let's say 655. If that 655 level breaks, we're on to something. That's going to trigger that pullback that I was talking about that I'm waiting on. The pullback's going to come. That's going to get bought up. I don't think this is the big short. I think that this could be a 5%er. 7%er now that we keep going higher. But if the structure does break up here, it's going to drop because we haven't really built any structure on the way up. So I'm waiting for that. Don't be shocked at all if this ends up being some sort of a trap just to get bears out of the market, because this sentiment's real. Remember, we do not have a deal done with China. That's what caused this major sell-off. And China's still coming out there and being like, screw you guys. And Trump's like, don't worry, he just had a bad day. Is he going to have a bad day next week? We don't know. So that's still looming out there. And so be careful. At the exact same time, if we close ripping higher today, Monday, Tuesday, we get some follow through up above this big bear candle, it's going to kind of repeat what we did over here. And that could be opening the door for 700 on SPY. Could be very bullish. So we're on that tipping point. And now I'm just waiting to see what the bulls actually do. Because if the bulls follow through, I bought calls off of the 10. You always buy on the 10 EMA, my friends, on a weekly. Always buy. It usually plays out. It's one of the easiest strategies you can have. So I bought a whole bunch of calls off the 10. Those are printing. But I'm also being very, very cautious just to know, like, if this was going to drop, this gap would be the perfect play to get everybody in bullish. Everybody got cleaned out. They're all going to jump back in, and this would be a great place for the market to pull the rug out if they're going to do it. So I'm watching it. We'll see what happens.
Tony, ticker time. We want to get some tickers from
do
the
it.
chat here because they love doing ticker time with Tony. There's a few people that were all over it off the hop here, but give us more tickers. CCI. We'll go off the board here a little bit. Crown Castle. This one's interesting here. I believe it reported earnings or had something news yesterday, but give us some technicals on CCI.
Yeah, let's take a look at this. So we are basing on this. I don't know if I've ever really traded this stock before, but it is trying to base. The big level for me to truly believe we've got something is going to be like 120. Man, if we get some closures above 120 at this point, we're going to work our way back up into 150, 160. Like that's the next level that we're getting to. Could that be happening? I think so. A lot of the times whenever I see these kinds of bases come through, I want a trap to happen. I want the bears to really commit and then get taken out. To me, this looks a little bit more like a flag. And so I'm not sure we have that yet, which probably means shorter term. Over the next maybe couple weeks, we could be seeing some selling on this stock and pulling back down. But this is the level to watch, 91 to like 85. If the bears step in hard and then we get a big gap up or something like that, that could finally trigger this thing bullish. And in the meantime, I think we're just going to keep on hanging out. So these are the big sentiment levels I'd be watching. And until we get up above 120, I don't trust the bulls yet. This to me looks a little bit more like a flag. Probably means going lower in the near future.
$5 tip from Chicken Breast. They want SMR. New Scale Power, SMR.
All right.
You always come to the front of the line when you drop a tip.
Oh, yeah. Let's go. I hate that candle on a weekly last week. That's pretty rough. To poke your head, is that a new all-time high? To poke your head into a new all-time high and get beat and then get follow through to the bear side. Remember what we talked about. This is our higher low on a weekly. This is what I would care about right here. Let's see. This is at $30. $30 breaks. Something's off. So we want to keep an eye out on that. Bulls are going to try to hold this level with everything they have. It might dip and then squeeze out. They tend to do that a lot because this is a big time spot. It has to hold. So now that we've made a new high, this has got to hold, which again, the sentiment off of this new high is not great. So I would kind of, that's pretty rough. Even bull moves right now, I think are going to get met by more bear demand around $45. So I'd be looking for some type of rotation back down if that's going to happen. If this can squeeze back up and we can play back into 55, the bulls have a chance again, but they've got to close strong because whenever you go to a new all-time high, this is what I'm talking about with SPY. We've got to see the bulls hold through. If not, everybody jumps in and then everybody immediately has to close right away. And that causes a lot of that flash selling. So keep an eye on that. But man, yeah, that 32-ish level or whatever 30 is going to be, that's the line in the sand. Keep an eye out for it.
CRISPR Therapeutics, CRSP. That's coming from the Crow, CRSP.
Let's go. We just barely put in that higher low gap trap. So we just hit that key level here on a daily. I guess it's on a daily. Hit this level, made that new low, and now it's trying to squeeze. So that's good. I would draw a trend line through here. And if ever we can, it might be compressing here. I wish this thing would stay, but if this could get up above that trend line, we should push back into 78. So at the moment, this is a really nice gap up. I don't know if this is off of earnings. I probably is. Weekly chart looks good. The weekly chart, I mean, a few upper wicks, but it did end up closing pretty strong where it needed to. And this is the buying area. So even if it does dip, I still think we're going to get bought up some. But on a daily time frame, we just trapped that low. This is exactly what we want. A lot of people freaking out. Liquidity area right here should keep running higher, and then it's just a matter of breaking that trend line. That's what I'd be waiting on.
Tony, could you walk us through your time frames when you're doing this? Because I heard you mention daily and weekly, and I think it's good to get do you go daily, then weekly, and then daily? How do you do it?
Yeah. So for me, I look at time frames as how long sentiment's going to hold. So like on a 5-minute, you're going to go bullish and bearish. Remember, you're going to be taking out these higher lows. You're going to do that 10 times in a day. So if I'm trying to figure out if I'm going to hold a stock for 3 weeks, a 5-minute time frame does me no good because it's going to go bullish and bearish in an hour and a half. So an hourly time frame is going to give me some direction for about a week or so. So if I want to hold a trade for a week, I'm looking at the hourly time frame for the trend. If I'm wanting to see what's going to happen over the next month or so, that's the daily time frame. So that's going to let me know, like, okay, if we are in a bull trend on a daily, it's going to take at least a month or two for it to try to break trend or to continue to hold trend. And it'll take about a month or two to figure that out. And so if I'm planning on being in the trade for that long, I want to be on that time frame. A weekly is more like 3 to 6 to 8 months, maybe even a year. It could take a year for trend or sentiment to change on a weekly time frame. So if I want the big picture, I'm zooming out and I'm taking a look over at the weekly time frame to give me like, where's this thing going? Because they all play inside themselves. So if the weekly is doing this, I know the next phase is going to be a pullback. So that would mean that this part right here is going to go bearish on a daily. So if the weekly is doing this, I know this is coming. So then I go into a daily time frame and I wait for that higher low to break. And then this is going to start to pull back. And all that is just the retest of the weekly before it goes higher again. So I'm trying to place them all together kind of as like puzzle pieces to let me know what's going to break. If the weekly needs a pullback, like right here, right? The weekly's running up. We know this pullback's coming. And so if I just go to a daily time frame, it helps me to time this thing up. Once this breaks right here, now I know that pullback's actually into place. And then once the lower highs start to break, I know it's time to buy. And that weekly play is getting ready for a bounce. And so I use it to time things up. That was a long answer, but that's how I'm using the different time frames in my mind and my trading. It works extremely well. Using price action is going to show you what's about to happen. So I use this on everything that I trade.
Okay, we're going to APLD. Gabe threw us a tip. Pablo's been persistent asking. Carmen wants this. A whole chat wants APLD. So it's Applied Digital. Let's talk a little Applied Digital.
Let's go. So what we just talked about, we know for a fact this part of the weekly move is coming. It's just now when. So if you know that now, that takes away the buy up here, because now you're kind of playing that Russian roulette, right? You're like, it should go higher. It's super strong, but we know that this is coming soon. Every single time it's going to go up, but we know that this is coming soon. It goes up. We know that this is coming soon. That's how the markets move. So now we go to a daily time frame and we go, okay, this is the line in the sand right here at 20, at let's say 30.
Yep.
If that breaks, I now know that this part of the weekly move is happening and I want to get out. So if I was going to go bullish on this, it does look pretty bullish short term. So over the next week or two, the daily chart's saying this is probably going to keep going higher. The weekly chart is saying, get ready, because at some point structure is going to break, and that could be a gap. That could be whatever. So if you're going to play this, I would for sure have my risk, my stop in place around 30 to 28. See how much higher this can go. The bulls are strong. There's nothing saying this thing has to drop yet, but we know it will at some point. So that's where things get a little bit tough, especially with options. If you're trading a stock that's run up this much with options, you're going to be paying a huge premium for it. And that it's almost like you're paying the stocks right here and you're paying for options as if the stock was up here. That's the price you're paying for the calls. So when the stock finally gets up there, you're going to be back to break even. You go, what the heck? This thing went up 30% and I'm at break even. It's like, yeah, because you paid way over the amount for the calls. The calls, let's say, cost $1 here and you paid $3. That's the cost that they'd be up here. So options on these high flying stocks tend to be pretty rough. Be careful with these, especially out of the money. Shares, you can't go wrong with shares. It's cheap enough to do shares in this. It's safer. Just know this is your line in the sand. If that breaks, it's tanking out. So put your stop there and manage your risk. It's not about how much money you can make. It's about guarding your risk. What's my game plan if this thing goes against me? It's easy to make money. It's keeping that money after you've made it. And that's the shift in mindset. So whenever I see these high flying stocks, I go, the opportunities there, our eyes go wide. Oh my gosh, it's gone up 100%. It could do it again. But it's also has a chance to drop 70% like that, because everybody's thinking the same thing. And when everybody's wrong, everybody's getting out. And so you got to hope someone's there to buy your shares from you, because everyone is also trying to get out. So be aware of that.
Two more. Fast Eddie from the STN room. He wants to know about Oracle, ORCL.
Yeah. Oracle. So this one on a weekly time frame looks really good. It is extended, but the bulls are holding where they should. And what we did at this previous level is telling me that dips are going to get bought. So I would be looking bullish on this. We got the pullback on a weekly. So now we zoom in here on a daily time frame. And if I was here on a daily time frame, I love the new little low that came through. Again, look for these little liquidity grabs, right? Look for these little areas where the bears should have been, and then it's just immediate reversal. These are what caused the buyers to come in a lot of ways. And so if you can be prepared for it, instead of having your stop here and getting stopped out, you can start putting your entries down here, knowing that the weekly's telling you it's going to get bought up with high probability, and then you can start being the trap. It takes a little bit of courage. It's a little bit tougher, but that's the way to play these to get the best risk reward. Because if you're getting in, if your stop is here and you're getting in here, that is a 7-to-1 risk reward. If you're getting in here where everyone else is, that's a 1-to-1 risk reward. And that's the difference. On the exact same trade, professional traders are 3xing what everyone else is doing simply by their entry. And their entry comes from them understanding how this whole price action works, how the game is played. So I like this bullish. It should continue to run out. Now, there's another scenario here that I'd be looking at is a rejection off of this and then one more low coming in. If that were to come in, I'd still be a buyer of this based on the weekly time frame. And again, there's no guarantee this works. There's no guarantees like this has to go up because Tony said so. The probabilities are saying, yeah, this thing wants to go higher. So I'm going to play the probabilities, but I'm always going to have my risk in place because there are no guarantees in trading. You have to account for the opposite side too, right? You got to account for the loser. So I think it's very bullish. I would not be shocked if in the next few weeks, this thing is pushing a lot higher.
Last one. Henry throws us a tip on Amazon. Zebra N.
Oh, yeah. So Amazon's got earnings. Let me clean this up.
It does. Thursday night. So it's always tricky to do a technical 2 days before. No, sorry. Yeah, Thursday night next week, 5 days before. I'm losing track of days. 5 trading days before.
Leading into earnings, high probability we go absolutely nowhere. For me, I see a lot of buying structure happening here. I see the bears really committing and then not going anywhere, a lot like SPY, a lot like Qs. And so to me, I'd be leaning more bullish on this, but earnings, it doesn't matter how good something looks before earnings. Earnings can change everything, right? If a shocker comes in, it can gap down. And that's why I just don't play earnings. I'll wait and see what's going to happen. The best way to play earnings, in my opinion, is to mark out the levels that are going to break sentiment. And for me, it's going to be sitting right here at 210. If 210 is gapped below, that changes everything on sentiment. And it's probably going to be great day trades, but most likely heading a lot lower. And the next little area would be like 190, somewhere in there. At the exact same time, my sentiment levels for the bulls, 228. If we gap above 228, that's going to set the tone for the next month or two on who's in control. And so I just, instead of trying to predict what's going to happen, I'm going to predict and go, hey, I know that this level's big and this level's big. If we get up above this, I'm going to predict that this is going to run. And so I don't have to be right on the gap and risk money on it. I can just wait, see which way it goes. And of course, if it gaps up to here, there's nothing I can do. If it gaps down to here, there's nothing I can do. But if we gap to here or here, and it tends to magnify towards those levels, now it gives me a really good edge and I can make really easy money on it instead of having to catch the gap. I can just wait and see what happens. As long as I know the sentiment areas to watch, that'll set the tone for the next few months.
Tony Pawlak, the owner of Real Life Trading, you, as opposed to me and Dennis, are getting a lot of love in the chat, man.
He only gets love. He doesn't have any haters. There's no Tony haters in the whole world.
Man, I'm sure they're out there.
How do you do it?
There's no doubt. How do I?
There's got to be somebody that doesn't like Tony.
Come on, someone in the chat, like, come on.
Everyone loves Tony. That could be a TV show. Sitcom. Everyone loves Tony.
Thanks for having me, guys.
That could be. We could do. You know what? We are going to do a new segment on at STN, and it's going to be called "Everybody Loves Tony."
Yeah.
Everyone loves Raymond. Everyone loves Tony.
He's got well. Look who he worked with for all these years, Dennis.
I know Jeremy Newsom. Everybody does love Jeremy Newsom too. Real life trading. We just love real life trading. Everybody loves real life trading. Tony, thanks so much. You're always cheery. I know you need your sleep. You got the kids. How are they doing?
They're doing great. They're only waking up one time a night right now. So
you're
my life,
killing it now.
I'm a whole new man. You're
like awake and you like can think again. Like, dude, you come out of that like
my
baby like Pawlak.
Yeah. I mean, I'm seeing everything clearer now. It's a whole new life, but my wife's doing some awesome sleep training, so it's all
Okay,
her.
yeah. Okay, Tony, we had talked about doing some more stuff together, and then you like threw in having twins or something, and we
No.
kind of got off track on that.
No.
So I'll give you a pass for right
Okay.
now, but I'll be dialing you up next week.
Hit me
Tony
up.
Pawlak,
Let's do
owner,
something.
Real Life
Awesome.
Trading on
Thanks,
Pre-Market Prep.
The nicest guy. He knows his charts. I mean, how do you go wrong? Tony's awesome. We
You
love
got to
Tony.
get him mad next time. No, let's get him mad.
I don't
Try
think
to-
he can get mad. I don't think it's
Try
him.
to.
I actually
Joel's
don't think he
Joel's
can.
always trying to rile people up, man.
No, I know. Like he try, yeah. Like well, that's what me and Joel do. We like to get wound up here. Me and Joel, there's some haters for us for sure.
I got
Tony.
two things. Things for y'all. First, a word from our sponsor. This show is brought to you by Hive Digital Technologies, a global leader in green power data centers for Bitcoin mining, high performance computing, and AI. Operating with nearly 0.5 gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production by the end of this year. Scan the QR code in the bottom right corner. You can learn more about Hive. You can also click into the description of this YouTube video. There's a link there to learn more about Hive. Thank you again to our wonderful sponsor, Hive Digital Technologies. Second thing, couple little programming notes here. Coming up at not around market open time, 9:30 till probably about 10 a.m. We're going to have Money Mitch trading live in the STN room. A little bit later at 1:30 to 2 p.m. Eastern, CC Legator, and in the week strong with CC. And then next week, I want to give a little heads up early on pre-market prep next week. Todd Gordon on Monday at 8:35. We're going to have Danny Kirsch on Tuesday. Scott Brown on 10 a.m. on Monday. And also we have a new STN guest coming up on Monday, Jamie Stout. She's going to be doing a little segment, Capital on Capital, Politics Influencing Markets. That will be kind of fun. And then yesterday in the STN room, folks, we started a new show, The Trading Edge with Trader Prad. Prad is a younger guy who has some really dynamic ideas. On the intro show yesterday, we were talking about using PreMarket as a way to hedge some of your equity trading. Also using PreMarket to get probabilities about things that could be impacting stocks. Really interesting guy, really unique angle. Come check us out in STN if you want to check out some intriguing new content, folks.
Awesome. Fun. And we're going to have some great trades for you guys tonight as well. I know I love to do my weekend trades. We're set up when we're full bull mode for the weekend trade. Unless we roll over here hard, it's going to be a lot of weekend trades.
Dennis, even if we roll over
you don't even need,
hard,
you do them
so,
no matter what.
So let's say we're down like 2,000 points and
I'll do all the weekend
3:30
trades
to
even
4
more.
show, and someone says, "Oh, look at SoFi, it's down $3," and Dennis will be like, "I'll buy it."
Yeah, blindly buying the dip, win money. That's kind of how it works.
You might do some hedging. But the PreMarket thing is really interesting, and I want to talk to Prad. And also, we have a prediction market expert in the STN room. That's Mike Franz. And man, more trading ideas, more the better. Well, another great week here on pre-market prep. We are hanging at the all-time high. That was 28, 68, 12 and a quarter. We're 25 handles from that pre-market high. So that's significant to me. Let's get back up there, clear that. But I've been looking at Tony's possible scenario here. You don't like the bears say, oh, that number's so good, they're cutting interest rates. They throw in the towel, and that's sometimes when you get to reversal. But thanks for joining us, folks. It's been fun. Great week on pre-market prep.